All right, let's talk about tax advantages, and specifically in this episode about backdoor Roth IRAs. All right, let's talk about the backdoor Roth IRA. You're converting money actually to, it's not even a tax classification by the IRS, but we just call it this, the backdoor Roth IRA. Before we get into the details about what is a backdoor Roth IRA and how to get there, we have to understand what is a traditional IRA, what is a Roth IRA, and so we have to build some basis on that. So again, a traditional IRA is when you can contribute money to a traditional IRA, $6,000 in this year, 2022. If you're under 50 years old, if you're 50 and older, you can contribute the catch-up contribution of additional $1,000, which puts you up to $7,000 of a contribution. Now, when you make a contribution into a traditional IRA, that $7,000 is subtracted from your gross income, so you do not get taxed on that $7,000 of contribution. If you made $75,000, you contributed $7,000, you get taxed on $68,000 now for income, not the $75,000. So that money goes into traditional IRA, it grows deferred, you don't pay any taxes as it grows, you only pay taxes when you take money out because you never had paid taxes on that money. So with the Roth IRA, it's very similar to the traditional in the sense the contribution limits are the same, $6,000 if you're under age 50, $7,000 with that $1,000 catch up if you're 50 and older. But you do not get the tax advantage up front on the Roth IRA. You do not get a tax break or that it does not come off your income when you make that contribution because you're paying your taxes right off the bat. The beauty of the Roth now, it grows tax-free for as long as you have that Roth. When you reach age 72, when the required minimum distribution age comes, you do not have to take required minimum distributions out of your Roth IRA. You don't even have to touch it at all. If you do take money out, all that money is tax-free. So that's a huge advantage of having Roth IRAs over a traditional IRA. Traditional IRA, the biggest advantage, of course, is getting that tax break right away. But long term, if you can look long term, Roths are going to be the better situation. The biggest regret that I would say my clients have confessed to me was they wish they would have done more Roths when they were younger, when they first came out, than they did. Okay, now let's talk about what is a Roth conversion? Now, Roth conversion is converting money from IRAs or 401ks into a Roth. But by doing that, you have to pay taxes. You have to count that money as income. There are no limitations on doing Roth conversions. There's no limit you could do. As much of taxes you're willing to pay as regular income taxes, you can do any conversions, okay? So that is something to consider on the Roth conversions. Now, when we get into the backdoor Roth IRA, what is it and why is it a good idea? It's for people who are high income earners and they don't qualify to contribute to a Roth IRA. They make too much money. There are income limits to qualify to contribute to a Roth IRA. And right now those income limits are, if you're single, if you make over $144,000, you cannot even contribute money to a Roth IRA. If you are married filing jointly, that number in 2022 is once you make over $214,000, you cannot contribute anything into a Roth IRA. You don't even qualify to put money in that tax-free account. Now those numbers are smaller. If you're contributing to an employer sponsor plan and you want to contribute to a Roth, those numbers are significantly smaller if you're contributing to both, into an employer sponsor plan and into an IRA as well. $68,000 for a single is the limits, and for a couple, $109,000, so significantly less. So if you are contributing to both employer sponsor plans and IRAs, Roth IRAs, you do have some limitations. So for high income earners who do not qualify for a Roth IRA, what you can do, even if you're above these income limits, you can still contribute to a traditional IRA because they don't have you don't get to deduct it. Once you're past these income limits that I stated for the Roth, the same income limits apply for an IRA. If you're under those income limits, you get to deduct those contributions into the IRA. So for high income earners, the best thing they can do here is contribute money after tax into an IRA. They do not get the tax deductions because they make more money than the income limits allow them to. If their income limits were below these numbers I just gave you, you could get a tax deductible IRA and save money off your gross income. But since they make more money, they don't get that tax deduction, but they still get to contribute to a traditional IRA after tax. So now what do they get to do with this after tax money? They can roll that after tax money, since they already pay taxes on it, to a Roth IRA, and you don't have to pay any money on that after tax contributions. Depending on how long that money was sitting in that after tax, and maybe you had some good growth, well, the growth portion is not tax-free because it made money. And so let's just say you had, over the years, you contributed $50,000 after tax, and it grew $25,000. Okay, so it's the after-tax money is $75,000, but $50,000 of that is your contributions, and $25,000 is the growth portion. You can roll all that $75,000 after tax into a Roth IRA. Now that $50,000 is non-taxable, the $25,000 is taxable as income because that's the growth portion. So this is a great way for high income earners to still be able to be involved with Roth IRAs. The rules are still around to take advantage of that because the long-term plan of that is to let that money grow tax-free. And the best way you can get your money to your beneficiaries outside of life insurance tax-free is Roth IRAs. And so if you qualify for that, definitely look into doing backdoor Roth IRA. Again, this is not an IRS tax classification. It is just a term that's getting widely used in this industry, and people are becoming very fond of it. We are going to upload a document here and share this document link from Investopedia explaining more details about that backdoor Roth. If you like this information or you want more information, please click the like and subscribe button, and we will actually get some more information on taxes, Social Security, retirement planning to you very soon.